in essence, you are challenging and disrupting people's core values. And, this is not a judgmental statement. It's, everyone, it's a free world. Everyone can choose whatever values they want. It's just that we decided to go down this path. And that did, lead to turbulence. And that did lead to significant changes at all levels in our organization. And it was painful, very painful.
Welcome to the Impact Multiplier CEO podcast. I'm Richard Metcalf, founder of X Quadrant, and my mission is to help the world's top CEOs and entrepreneurs shift from incremental to exponential progress and create a huge positive impact on our world. Now, that requires you to reinvent yourself and transform your business. So, if you're ready to play a bigger game than ever before, I invite you to join us and become an Impact Multiplier CEO. Today I speak with Kevin Chin. He's the CEO of Arowana. That was a private equity business that he founded and ran very finance focused for 10 years before realizing that there was a bigger impact that he could make. He transitioned the business to becoming a B-Corp, focused on a triple bottom line of planet, people, and profit. And he's built one of the leading impact investment groups in just less than 5 years, as well as one of the highest ranking B Corps in the world. He's also been recognized as one of the Real Leaders Impact Award winners. What I enjoyed speaking with Kevin is his real commitment to building out impact across the world, across generations, and a commitment to raise up leaders who are also willing to go on that journey with him and scale and create and really multiply their impact further. So in this discussion, we actually get into that whole transition from being a private equity firm to an impact business, the obstacles that he had to overcome internally and externally, as well as what his next level looks like. So I'm sure you're going to enjoy this fascinating conversation with Kevin Chin. Kevin, welcome to the show.
Hi, Richard. Great to be on, and thanks for the invite.
Yeah, you're welcome. So I'm looking forward to speaking with you today. I know that in your past you have had to turn around software companies in a really difficult situation, right? You only had 6 weeks of cash left. You turned it into a global leader. You sold it to Oracle, and then you went ahead and built a business called Arowana, which has become, I believe, one of the world's highest ranking B Corps and a top impact investment group. So as you know, I'm all about impact, as even the title of the podcast. So let's start there. What led you to build that business? And like a few years later, where are you at in terms of the impact that you're making?
Yeah, so I guess similar to a lot of people who've pivoted to impact, if you will, I had a sort of family moment many years ago where my oldest niece asked me what I did and then asked me why I did it. And, without going into the full details of that really challenged me. And so at that juncture, I started to look for, a broader purpose for Arowana rather than just, making money. And whilst I was at a conference in Miami, this was in 2016, I stumbled into a session which was all about B Corps, and was very excited and came back and said to the leadership team of Arowana, hey, we're going to do this. We're going to become a B Corp. Everyone kind of looked at me strange. But fast forward to today, it's one of the best things, if not the best thing we've done. And really what we've committed to in terms of becoming a B Corp is a triple bottom line of not just profit, but also people and planet.
Okay, so Arowana was started off as a regular investment group, is that right? And then you decided that you wanted to really focus on the impact side.
Yeah, so we started in 2007 as private equity funds type of business. And in 2016, late 2016, just on the cusp of our 10-year anniversary was when I decided we're gonna change direction and we're gonna embrace a bigger and broader purpose and an impact orientation.
So what was that purpose? How did you come up with that?
What I really like about the B Corp purpose and mantra really is its elegance, where it talks about the triple bottom line, and the triple bottom line is people, planet, and profit. And that there's a lot of conjecture as to whether by embracing such a purpose, you're going to be diluting your profits, as in your investment returns will reduce. That's certainly not the case. And with a couple of our businesses now, I would argue that having that broader purpose has actually led to better investment returns than if we were just solely focused on monetary objectives.
So have you captured the purpose? Is there a specific statement that you have in terms of like the kind of impact you want to make on the planet or on people? It's quite broad, right, when you keep it at those categories.
Yeah. So we have measurement tools within the kit bag, and we adopt that for Arowana itself as well as all the companies that we have in the stable, and that is largely modeled on the B impact assessment toolkit that B Corp provides and puts you through. When you want to become a B Corp and or when you're going through a recertification process. So as a B Corp, you have to recertify every 3 years. And my sort of elevator response to people who ask, so what is B Corp in practice? What does it involve? What I say to them is that it's, in essence, ISO 9001 on steroids, because not only are you signing up to, having great systems, processes, governance, etc., as you do with ISO, but you're also attesting to a purpose architecture, for lack of a better term, and that's got to be real. It can't be, a motherhood statement with nothing behind it. It can't be a pledge.
So you started to measure impact. You started to get serious about this. What was the reaction? I mean, you're taking these, these hardened private equity fund managers or investors, and you're telling them that now, it's not just about the money anymore. How do they react to that? What was the whole journey that you went on? It sounds like it could be quite a big thing after 10 years of operating in a certain way.
It's a great question, and I notice you're smiling as you ask that, because you've hit on the toughest elements of that transition, where in essence you are challenging and disrupting people's core values. And this is not a judgmental statement. It's everyone. It's a free world. Everyone can choose whatever values they want. It's just that we decided to go down this path, and that did lead to turbulence, and that did lead to significant changes at all levels in our organization. And it was painful, very painful. And we had to overcome a lot of internal strife, if you will, to get through it. And culturally, we were not in a great place when we did this. But I would say, 5 years, 6 years after the fact, culturally, and we're in more places around the world now, we're more aligned than we've ever been. So it's been worth it, but very difficult at the time.
Yeah. So if you're giving advice to somebody who wanted to make a similar transition, like what are the big pitfalls and what specifically would you recommend they do, or what did you do?
So I would say the biggest learning for us, or rather, the thing we underestimated, if you like, going in, was we didn't expect it to be as tough as it was to certify for B Corp. I mean, for us, it took almost a year and a half to get certified. And, we had to improve a lot of things. We had to change up a lot of things. But one of the aspects about B Corp, which is, I think, not terribly well understood, is it's an attestation to give up the shareholder primacy objective that is the key driver for many organizations. And this stems back from, Milton Friedman, 40 plus years ago. And that's a legal change within the Constitution and memorandum and articles. So that can be very difficult if you're, for example, a listed company. And so you've got to be ready to battle that with your shareholders or some of your shareholders, perhaps. And then you've got to have a very clear internal and external communications plan. And we probably were a little bit naive, and didn't do that as well as we could have in Iceland.
Did you actually have to battle external stakeholder shareholders more, or was it internal employees, or was it both?
I would say it was more internal. It was more internal. So as far as our external shareholders and stakeholders were concerned, and perhaps it was just a lack of understanding on their part, but we were able to, get through the voting on that. I think there was more than 95% voted in favor. So that wasn't an issue. I would say the other thing to be prepared for is that there are, no sacred cows, for lack of a better term, where you decide to do this, and you've got to be ready for profound change. As I mentioned, it's not just a pledge.
Yeah, so let's just before we go on to the internal side, the external. So it sounds like these might be turkeys voting for Christmas. If you got your shareholders who are voting to remove their primacy, shall we say. So why did they do that? Was it because they too wanted just to make a bigger impact? Was it they kind of believed actually long term we might even be better off? Or what was going on for them, would you say?
Yeah, it's a good question, Richard. I would say it was the latter, as in they believe that in the long term, it's better. And the example I always give to people who ask, why we've done it and why is it a benefit in the long term, is just the example of the Boeing 737 MAX, where everyone I think knows that case study now, where a focus on short-term profits and trying to compete led to shortcuts that had profound implications for Boeing even today. So that is never a situation we would want to end up in. So I think our shareholders as a cohort were sympathetic to that and sophisticated enough to appreciate that as well.
Okay, so let's talk about the internal side, the employees. You mentioned that was actually the source of the biggest resistance. So what's going on there? You might think, well, employees would love to have more of a sense of purpose, of mission. That's what we're all told, right? That's what everybody wants. And yet, when you were trying to implement that, you got pushback. So again, what was going on there, and how did you actually win them over?
So I think with that, it just so happened we were doing this at the cusp or the inflection points of when impacts really started to take off, and when B-Corp was just starting to get traction. So at the time we were doing it, I think B-Corp, there were about 2,500 B-Corps in the world. Now there are more than 7,000, I believe. So it's been growing very quickly, and the world was really just starting to embrace impact, and it's really accelerated from there. So the resistance, I guess, really came from me coming back from another conference. Here's Kevin, he's got another crazy idea that he wants to roll out. And what is B-Corp anyway? No one's heard of it, and why are we wasting time on this? To when it was unpacked further, and I think some folks realized that, hang on a second, does this mean this is sacrificing short-term profits and money for a longer-term goal, and sharing the objectives of the organization with all stakeholders rather than shareholders, and removing that, focus on money in and of itself. That was the trigger, I think, for, it's challenging someone's core values, as I mentioned before, that causes, that turbulence. So in terms of overcoming that resistance, honestly, we didn't. People just left. And for a time, we battled people throwing stones back at the organization. But, that happens, and we're not unique or alone in that regards. But fast forward to today, what I've definitely noticed in the last 3 years is we get a lot more companies that approach us and say, hey, we see what you're doing. We've been approached by this group or this fund, but we'd prefer to partner with you guys. And every week I get about half a dozen to a dozen messages in my LinkedIn saying, love your purpose, keen to see if there's opportunities to join the firm. So I think, it's only been the last 3 years probably that Impact's really accelerated. Whereas when we did this 5-6 years ago, we're just on the cusp.
I hope you're enjoying this conversation. This is just a quick interlude to remind you that my book, Making Time for Strategy, is now available. If you want to be less busy and more successful, I highly recommend that you check it out. Why not head over to makingtimeforstrategy.com to find out the details. Now, back to the conversation. Well, that's a great transition. I'd love to talk about the future. This is called the Impact Multiplier CEO podcast. So how would you love the business to multiply its impact over the coming years, right? What would breakthrough success, even where you are now, what would be a whole new level of success and impact for the business?
Yeah, that's another good question, Richard. So I think there's three elements to that. So number one would be picking the right sectors to invest in. And those sectors would be conducive to delivering an impact across that triple bottom line, people, planet, and profit. And then what you can do is segment or unpack people, planet, profit with reference to the UN SDG goals, the Sustainable Development Goals, all 17 of them. So we're focused on certain sectors, and that's a big change. Well, that's a material change for Arowana, whereas, when we first started in 2007, we were primarily driven by the financial metrics of an investment and whether it would make us money and the right returns or not. Whereas now it's, how do we measure not just the potential investment returns, but the impact returns to people and the planet. So the sectors that we're involved in include education, electric vehicles, plastic recycling, to name some examples. So element one is picking the right sectors where we can have an impact across those dimensions and a multiplied impact. Element number two is building the next generation of C-suite leaders, founders, entrepreneurs who truly embrace impact. And it's not just, a fashionable thing to say, and it's not just, impact washing, for lack of a better term, but it's core to what they want to do and what they want to look back on and say they've achieved and be proud of. So one thing that Arowana has done is we've launched an entrepreneur in residence program designed to build our own. It's like an in-house academy, if you will, to grow our own CEOs that are impact focused and that can help, run a business effectively for impact. And the third element is also picking markets, as in geographic markets around the world where we can make the most impact. And that tends to be in more emerging markets, although the world is kind of narrowing in terms of that gap. And in that regard, Southeast Asia, as well as the Middle East, GCC, and surrounding markets are areas of focus for us. Large populations, lots of people, lots of issues with negative impacts on the planet, but lots of opportunities to solve those problems as well.
Yeah, so I love it. I think it's really clear. You've got that kind of leadership angle. You've got the kind of sector focus, the geographic focus. Let's imagine you were, 90 years old, telling your great-grandchildren about the ultimate impact you had made with all of this. What would you love to tell them the most?
I was actually just having this conversation with someone who just joined our electric vehicle business, that what I didn't want to end up at 90 years old, if I'm lucky enough to get there, just to be able to look back and say and think that, okay, I've made all this money, I've bought all these properties, I go on these trips, and I eat all this food. It just seemed shallow in a sense. And again, it's not a value judgment, it's personal for everyone, right? And I think it would, for me anyway, I know it would be a lot more fun, a lot more satisfying to be able to say to my family, the kids, that, hey, this is what we built. We electrified these vehicles, which reduced emissions, which then helped to improve air quality in the Philippines, for example. And you can see these things running around, and that was a fun project. It was a difficult project, but we made it work. And to me, that would be the sense of pride, if you will, as a 90-year-old, to be able to share something tangible like that, and not just say, got this house, that house, and I've been here, been there, I've eaten this, and beyond just a sort of a consumer mindset, if you like.
Yeah, I love that. At some point, the money isn't going to make so much of a difference, right? And the legacy becomes what it's all about, I think. I guess, Kevin, the question I have ready for you at this point is what I call the stretch, right? So what might you need to shift in how you lead, right? How you show up, what's going on for you in order for you to multiply your impact? Because obviously, you've got I'm going to call it a great default future, right? It's looking good. Things are going well. And so you could just kind of continue to do what you do, and things are probably going to incrementally grow. What fascinates me is the exponential, right, or the breakthrough. And I always believe that comes from a personal level, right? So there's perhaps a shift that we might need to make inside of us that's going to release new things in our business and in our world. So I'm wondering what comes to mind for you. What might you need to kind of stretch on? What muscles might you need to build if you want to multiply your impact even more?
I'm a big fan of Salim Ismail and Pete Diamandis, who espouse abundance, and that this age affords people with tools to 10x themselves and 10x their businesses in ever shorter timeframes, and with less and less resources. So I think for me, it would be two things that I need to constantly improve on and remind myself on. Is I'm naturally a person that has extremely high attention to detail, perhaps borderline OCD. Some of my team would say definitely OCD. And sometimes I'm conscious that can be a limiting factor if I'm just completely over the top on something, and it slows things down, or it effectively disempowers someone by virtue of that. So it's finding that balance of having quality, and I'm always a fan of having first class output, in everything we do, but conscious that there has to be enough rope for team members to do what they do well, and we've got great team members, and they need to have that capability to execute. So that would be one. And then secondly, I'm at an age now where I'm conscious that it's easy to slide into dogma, that you've been around the world long enough, you've seen many things, you've experienced many things, and nothing's new per se. Or I slip into this mindset that nothing's new. So that I'm very conscious of, that staying mentally agile and flexible is important. So I've nominated a couple of people in our team, the 20-something-year-olds, to be my next generation coaches, for lack of a better term, to stay mentally agile and not sort of slip into this, that won't work, because you just get to an age, right, where you've experienced so much that you think, okay, I've seen it all.
Yeah, thank you for sharing that. I think it's great. It's been a really interesting conversation, Kevin, because here we've just been talking about, on the business side, real clear areas to focus on, the geography, the sectors, the leadership development, and then we've also, just now gone deep in terms of, it's easy when it seems like people are admiring you. You built something great. You're investing in all these companies. You're getting all these inbound interest. It can be easy to be satisfied with that and say, you know what, I'm going to settle. This is okay. We can just keep doing what we're doing. But I'm hearing in you that sense of, well, no, let's still challenge myself, make sure I don't become that kind of unassailable, set in my ways kind of leader who feels he knows it all. So I think that kind of willingness to reinvent is perhaps something which is actually, it's already present in you, right? Actually, you're not saying, oh, I'm into dogma. It's just that you realize that could be a trap. And I think that's really a genius move. So thank you for this conversation. I think what I've really enjoyed about it is, as well as this part we've just talked about, really being clear that transition from a very financially focused business to a purpose-driven business, a triple bottom line business, is doable. It requires a lot of explanation and change management and selling of the idea and explaining it. But even in the financial sector, which you would imagine is a sector that might even be more resistant, it's actually been possible. And looking back, you said it was the best thing that could have happened. And it's increased your returns. So I think it's just a great positive reminder to people who are perhaps haven't yet fully gone all in on impact, that actually it's possible, and you can run it as a project, and you can lead your stakeholders, and you can sell it to your shareholders and everything else and make it happen. So thank you for the case study. It's been great listening to that.
No problems.
Last question, really. Last question, Kevin. So if people want to find out more about you and about the business, where do they go to do that?
So probably our website would be the fastest and easiest. That's arowanaco.com. That's arowanaco.com. There's also a book I've written called Hyper Turnaround, which chronicles the journey of a software business, which is going back almost 20 years ago now. I was part of the team that turned that around from 6 weeks of cash to survive to become a global leader in its field, and then it was acquired by Oracle. Interestingly, that business is in natural language inferencing, which is all the rage now with generative AI, and I think worth infinitely more if we kept on to it. But those are probably the two main sources.
Yeah, perfect. Well, Kevin, thanks so much for the conversation. I've really enjoyed it, and look forward to following your journey as Arowana continues to multiply its impact.
Pleasure, Richard. Thanks for having me on, and keep up the great work on your podcast too.
Thank you. Well, that's a wrap. If you received value from this conversation, please do leave us a review on your favorite podcast platform. We'd deeply appreciate it. And if you'd like to check out the show notes from this episode, head to xquadrant.com/podcast, where you'll find all the details. Now, finally, when you're in top leadership, who supports and challenges you at a deep level to help you multiply your impact? Discover more about the different ways we can support you at xquadrant.com.